I don't think if you close your eyes and throw a dart, you'd be able to make money. I think, yes, they're going to print a lot of money because this is a global monetary transition. It's going to dwarf what we've seen so far, especially in the COVID era, which was a nutso period for financial markets. Trump and co are going to print more money than Biden did during COVID, and that money gets printed, and Bitcoin benefits the most out of all the different risky assets that one could own out there. And that's how we get to $1 million Bitcoin. I think that happens sometime between now and when Trump exits office in 2028. So that's sort of my goal. North Star, this year, I think we get to 250,000 in Bitcoin. Maybe this summer we run to something like 150 to 200,000 before we get some sort of like pullback, right? They set these 90-day targets. Obviously, now you have you have a strike price, a maturity, an expiry. There's going to be insane volatility around that. Will they or won't they? What's the deal going to look like?
Arthur Hayes kicks things off by referencing what he calls Liberation Day, a crucial inflection point in the markets after facing a mini financial panic. The markets didn't just stabilize, they reversed sharply. But this reversal wasn't random. It followed key pivots from U.S. leadership, most notably Donald Trump's decision to pause new tariffs for 90 days. Pulling back from his earlier aggressive trade stance. That one move helped ease global tensions and spark a market recovery that many didn't see coming. This kind of insight changes how you understand macro shifts and where crypto fits into the bigger picture. If you're finding value here, take a moment to like this video, subscribe, and turn on post notifications so you stay ahead of the macro trends moving the crypto space. Drop your thoughts in the comments. We'd love to hear how you're positioning yourself in this market. Thanks for watching. Enjoy the video.
So, obviously we had, Liberation Day and a week of financial, essentially, panic. And in the wake of that, not a capitulation, but a pivot from a maximalist tariff position. Trump said, okay, 90 days and everybody except China. Besson came on TV and said he's got treasury buybacks. I'm going to make sure that the market's well functioning. And that was the bottom of the market. And what's crypto? Bitcoin's up, what, like, I don't know, 35% since then. ETH's up 50%. Pick your, shitcoin, meme coin, all crushing it. NASDAQ up on the year, right? It was down 20% into early April. Now it's, up 30% since the day. So the bottom is in. And now we get this, U.S. and China are walking away from trying to impose tariffs on each other. And so I think sort of the meta that America is going to make itself great again using the tool of tariffs, that's over. I think it's going to come down to capital controls, but that's a longer burn issue. But as it portends to risk market, just buy everything, right? The bond market threw a bit of a fit. They pivoted, and we know what happens. The money gets printed. Bitcoin is just a reflection of global liquidity flows, and at the margin, that's the U.S., right? So what do we know is true about financial policy in the U.S.? Doesn't matter what party is in power, is if the bond market volatility gets to a level, and that level has been empirically seen to be 135 to 140 on the MOVE index, the policy response is immediate, like the same day. What do we have? In April 9th, MOVE was like, I think, opened at 130, 128, whatever it was, got to 172 intraday. Jamie Dimon goes on CNBC saying tariffs are dumb in his Jamie Dimon way, and
which is not to say tariffs are dumb. He just says every other word except for that. Yeah. Politically correct. He says tariffs are dumb.
And there's a 90-day pause in everybody except China. Besson gets on television a few days later on Bloomberg and says, "I've got treasury buybacks. I can, Don't fuck with me. I've got treasury buybacks. Treasury market's sweet. Right?
My guns are loaded."
Yeah. Bottom market bottoms. And then we rip. Right. So, and what happened in September of 2022? Bond market is getting crushed. S&P down 20%. MOVE is at like 140. Yellen or somebody in her staff says, okay, there's $2.5 trillion sitting at the Fed reverse repo. Let's change how we issue our bonds so that we draw that money out. And so she did more bills issuance than bonds issuance. And that sucked $2.5 trillion over, 2 years out of the reverse repo at the Fed into the global financial markets, and everything ripped. Stocks, bonds, crypto, gold ripped, right? And so that is the number that we should be focusing on. That is, volatility cannot be in the financial markets when you have so much leverage and everybody's running some sort of carry trade. And so that's why the authorities always step in when the volatility increases in the bond market. And because Bitcoin is literally just a reflection of how many units of fiat are there out there in the world, it goes up the most in price. And that's it. It's just that simple. So I think Trump team is very serious about trying to do their part in rectifying these imbalances. I think capital controls are the way they're going to do it, which is a little bit slower burn. But foreigners are going to react by selling assets because now there's a tax and they don't want to pay it. And so that's going to require printed money to replace those dollars. So if the foreigners aren't going to supply the dollars to levitate treasury market and the stock market and the property market, the U.S. government will supply it via the Fed, the Treasury, and sort of legislative actions that they can do, like Fannie and Freddie being out of conservatorship or stuff like that, right? So that's all coming, and that money gets printed, and Bitcoin benefits the most out of all the different risky assets that one could own out there. And that's how we get to $1 million Bitcoin. I think that happens sometime between now and when Trump exits office in 2028. So that's sort of my goal. North Star, this year, I think we get to 250,000 in Bitcoin. Maybe this summer we run to something like 150 to 200,000 before we get some sort of like pullback, right? They set these 90-day targets. Obviously, now you have a strike price, a maturity, an expiry. There's going to be insane volatility around that. Will they or won't they? What's the deal going to look like? And obviously, Trump's going to posture that he's serious about really inflicting some pain on trade partners. So you could see sort of, ditch the bride at the altar negotiating style where, oh yeah, I was going to do a deal, but fuck you. I'm going back to maximalist tariffs. Really get whatever he thinks he needs to get out of that negotiation. And we could see some insane volatility around, was it July 4th for everyone except China? And then China's like August 10th, something around there. Mm-hmm. So I think now we have those dates in mind. I wouldn't really want to be long. I wouldn't want to be overly long any risky asset, especially around the Chinese X date, because we don't know what's going to happen. I mean, we know eventually they're going to print money and all that kind of stuff, but in the moment, if you're leveraged and you're out over your skis, that can be pretty painful for you. I don't think if you close your eyes and throw it dark, you should be able to make money. I think, yes, they're going to print a lot of money. Because this is a global monetary transition, it's going to dwarf what we've seen so far, especially in the COVID era, which was a nutso period for financial markets. Trump and co are going to print more money than Biden did during COVID. That's going to happen. That's
you think
my prediction. And that's how we get to Bitcoin $1 million and S&P 10,000 and gold 15,000 and all these crazy price targets that you wouldn't otherwise expect.
Arthur Hayes, what's coming will dwarf COVID stimulus. Arthur Hayes doesn't hold back when comparing what's ahead to past financial crises. He believes the monetary shift now underway will make the COVID-era stimulus look small by comparison. His bold prediction: Trump's next administration could print even more money than Biden did during the pandemic. Why? Because the U.S. has no choice. 2. Support asset prices, keep markets functioning, and fund a ballooning fiscal deficit. The government will need to self-finance, especially as foreign capital becomes harder to attract, due to looming capital controls and potential tax penalties on foreign investors. That means one thing: balance sheet expansion is coming. Again, this isn't just a policy shift. Hayes sees it as a paradigm reset for global finance and a massive opportunity for crypto. Let's watch more clips from the interview.
No, I think Bitcoin dominance will peak. And obviously that's really a function of ETH and Sol because of Ripple, those are the big assets. If those start outperforming like ETH has in the last week, then Bitcoin dominance mathematically falls. Does that mean that the dog shit altcoin that you own in your portfolio is going to go up? Not necessarily. I think there's going to be a new narrative. I don't know what it's going to be. There'll be a new shiny thing that we all start trading. I'll be trading it for sure. It'll be fun. If it's a coin that's already launched, I think people are getting a lot more discerning, right? We don't want a VC-backed coin with high FDV, low float. That shit is not happening, right? We want to see, if you're already launched, where are your clients? Are they paying you in money other than the token that you gave them for farming it? And then if you're making money as a protocol, where's my money as a token holder? I want buybacks. I want staked emissions, whatever it is. Give me that profit back. This is not fucking a go party at Bitcoin Vegas at the club with all my money situation. And so I think those coins, and there's very, very few of them, we really like EtherFi and Pendle for that. In that narrative, we're going to go back to like fundamental season, all about cash flows all the time for anything that's not new. But if you're new, cool. We'll let you get away with like all sorts of Fugazi, Ponzi-nomics bullshit. Yeah. So essentially they want to trade interest rates embedded in crypto. How they really came into popularity was, okay, let's say that you have a token and this token has some sort of emissions or rewards program. So you have two risks here. You have the risk of the token price, and then you have how much of the rewards are you going to get. And so the thing that Pendle really popularized was separating those two risks. So somebody gets a fixed return token, somebody gets a variable rate return token, where the variable rate is based on the emissions and what the value of those emissions are by the maturity date. And you can trade these two distinct products. And that's what really has powered Pendle. So something like, I think it's like 6 billion TVL, whatever the number is. It's high. It's one of the highest projects out there in the ecosystem. And so they're moving on to, they want to trade now like interest rates, curves. They want to trade sort of funding rates and all these different things to sort of help the fixed income side of the crypto markets mature. And I'm sure, as a lot of your listeners know, that's the largest, trading markets in the world, interest rate swaps and those sorts of things. So if Pendle is able to really dial into that and create a product that us degens can trade and hedge with, then the sky's the limit in terms of the value they're going to create for token holders. And that's why I really love the product. And I think the team behind it, they're really switched on to really going after this massive opportunity to bring fixed income markets on chain and DeFi. And thankfully the tokens got pretty beat up over the last 12 months during this downturn, and has a very attractive entry price in the last downturn. We've been accumulating it. And then on the EtherFi side, they've basically, their goal was to become the American Express of crypto. Well, so what's American Express? It's a charge card for rich people. So what's EtherFi? It's a crypto neobank for rich crypto people. So they have a nice, cool card where you can send stables, you can use your staked ETH, borrow against it, spend against it, and it's using all Visa POS systems, and they're building a whole loan book and sort of just like a financial institution, all on chain. It's already profitable, and they are distributing revenue direct to token holders. So we are advisors on both projects. We're investors on both projects, so kind of mixing in both sort of roles. But if I had to say two projects that epitomize this like return to cash flows fundamental season, it would be those two. They want to reduce the trade deficit, which has a mirror effect of reducing the capital account surplus. It's just math, right? If I earn dollars by exporting things, I take those dollars and I buy treasuries, stocks, and property. If I no longer have dollars, then I'm no longer buying treasuries, stocks, and property. And so if you look at the marginal driver of U.S. exceptionalism in the stock, bond, and property market since the early 2000s, it is foreign capital buying stuff. And so tariffs are not politically palatable situation to rectify this. People don't want to have, their toy doll costs double, or when they go to the store, there's nothing there because it's always produced in China. And China, with 100% tariff, isn't going to send anything else to the U.S. That is not politically palatable. People are not going to vote Republican in 2026. And I think that message got through to Trump through various cabinet members, through Republican folks who need to get reelected. In a year and a half, like, this isn't going to work. I'm going to lose if you keep up with this tariff thing. And so we saw a pivot. Now, I don't think Trump has sort of abandoned this idea that the demise of American manufacturing, military strength, substance abuse, all that sort of stuff, driven by the financialization of America post gold standard. I don't think that he's stopped having that as a campaign promise to fix that. It's just that they're going to go about it in a different way. And so you can attack this deficit at the deficit level, tariffs, trade, or you can attack it at the surplus level on capital controls. And so I believe capital controls are coming to the United States in the form of some sort of mild taxation of foreign stock, bond, and property holding. And using that money, because foreigners will leave because they have to pay a tax, or at least some of them, then they have to print money to make up the difference because they're not going to allow the stock and the bond market to fall.
Arthur Hayes is sounding the alarm and blowing the trumpet, the alarm? A rapidly deteriorating political and monetary framework worldwide. Hayes warns of an inevitable shift toward capital controls, fiat currency debasement, and aggressive monetary intervention. The trumpet, that's for Bitcoin and a select group of quality crypto assets. The digital lifeboats he believes will help preserve wealth. Through this global financial transformation, Hayes' thesis is simple but powerful. Volatility is a feature, not a bug. Yes, there will be short-term pullbacks, especially around key political deadlines. But the long-term trend, fueled by relentless liquidity support, remains deeply bullish for crypto and other scarce, hard assets. If you believe in preparing for what's coming, now is the time to pay attention. Like this video, subscribe, and drop your thoughts in the comments. Are you positioned for the next wave? Don't stop here. Check out our other videos for deep dives into macro trends, digital assets, and the financial revolution already in motion. See you on next video.